of the paper F2 notes, Accounting for Management. So if you haven't yet downloaded the course notes, then pause this and do download them and make sure you've got chapter 1 in front of you. And you'll see it is only a few pages, and it's very much, to be honest, background information. I'm not going to read it all to you. There are really two things I want to stress. The first page you can read yourself, but if you turn to page 2, paragraph 4 says the main managerial processes, and you've got a list there of the main areas, the main jobs of the management accountant. And if I just chat very, very briefly about each, obviously the later chapter is going to detail, so far as it's needed, about all of them. But one of the jobs is costing. And all we mean by that is if we're a manufacturing company, if we make, for example, desks, then we're going to need to know how much a desk is costing us to make. It may seem fairly obvious, but we're going to need to know it, if for no other reason than to decide on a selling price, because obviously normally we'd want to charge a price more than it costs to make. Well, that is a job of the management accountant, to identify what the costs are and to do the arithmetic. And you'll see there are several chapters later going through the problems involved and how we deal with them in arriving at the cost. A second one of the jobs is planning, which is effectively budgeting. Again, there are chapters later going through it. But a business needs to decide, for example, how many workers they'll need next year. It often takes time to recruit new people, or it takes time, if needed, to remove people. And so they need to plan ahead. How many workers do they need? How much wood are they going to need to buy if we're making desks? Again, it's the management accountant's job. Another one, decision making. Management need to make all sorts of decisions. There's one I've mentioned in the notes, making a decision on what price to charge for goods. But a big area is a much more long-term decision. Suppose a company is wondering whether to buy a new machine. This new machine will enable us to produce more, make more profit. But stands to have a large cost. There's a question of how are we going to decide, is this machine worth buying or isn't it? Well, again, it's the management accountant's job, not to make the decision, but certainly to come up with the information, to come up with the figures, to come up with the recommendation for management to decide. The final one I've listed here is control. That it's the job of the management accountant to try and improve the business to become more profitable. And one important aspect of their job is to keep control of the costs. Clearly any business wants to try and reduce the costs, provided it doesn't damage the business. Certainly they want to keep a check. If costs go up, they want to know why are they going up, to check there isn't a problem. Well, again, it's the management accountant's job to be doing that. It does lead on, in fact, to quite a big area, something called variance analysis. But all of that's dealt with in the notes later. Finally, I'm going to add one more. You can squeeze it into the notes yourself. Slightly different. That I said the job of the management accountant is to improve the business, to help it become more profitable. Well, it is important, therefore, that regularly we check how well is the business doing. Are things improving, or are things going worse? Do we need to take action? So we need to measure performance. So another area is, in fact, performance measurement, which is, as I say, is slightly different from the other four, but measuring how profitable we are. That's just one example. And yet again, towards the end of the notes, you'll find there are 3 or 4 chapters discussing performance measurement. So that, in outline, is the sort of thing the management accountant's doing. The other thing that I want to spend a few minutes on is if you turn to chapter 3, sorry, not chapter 3, page 3, we're still on chapter 1 here. It says comparison of management accounting with financial accounting. And it is important that you do appreciate the difference. That in a lot of businesses, very often it's the same people who do both jobs. But let me make it clear what the basic distinction is between financial accounting and management accounting. And you see, I've left lots of space there on page 3. So, get a pen, do it with me. It'll help keep you awake while I talk. But financial accounting, first of all, I think everybody listening should be aware, whether you've done paper F3 or not, should be aware that every business is required at least once a year to produce financial statements. I'm not going to go through the different statements that are needed, that's paper F3, but certainly they'll produce a profit statement showing the profit for the year. They produce what many of you might know as a balance sheet, albeit when you come to F3 you'll see we actually change its name, but they produce statements. I'll say the main one being a profit statement at the end of each year. And they do it because it's required by law. Once a year, how much profit did we make during the year? Well, that's financial accounts. Now, I'll say a bit more obviously shortly, but financial accounts, these statements are required by law. And they're prepared once a year. Now, I'm sure some of you are already thinking that perhaps where you work, and certainly in an awful lot of businesses, they produce statements, certainly profit statements, once a month. It's very common to do monthly accounts. But why are they doing monthly accounts? It's not because the law requires it. The reason so many businesses do accounts each month is to help them run the business. That if they prepare a profit statement in January and find perhaps they're losing money, they can try and see, well, what went wrong in January? Is there any way we can improve things for February and start becoming profitable? But it's that sort of thing that they're doing the accounts monthly to help them run the business better, and that's what management accounting is. Just to contrast the two, management accounts, they're prepared whenever we like, whenever wanted. There's no rules. But as I said, it tends to be monthly. But I say again, it's up to the business what they find useful. Also, why are we doing them? Again, it's not because the law requires it. It's to help run the business. So that really is the big distinction between the two. It's very similar. As I say, it's very, very often, it's usually the same people who do both things. But strictly it is what you might call two separate jobs. Financial accounts once a year, management accounts whenever we want. A few other things though. One is, who are these accounts for? It's probably already obvious, but the financial accounts, they're available for everybody. They're sent to the shareholders, they'll be interested in them. The state, the government looks at them. They'll want to know because of tax, if nothing else. The bank might want to look at them, and so on. We say financial accounts, so I better wind down, then it's clear. Financial accounts, we're reporting externally. Whereas, to make it clear what I mean, management accounts, we don't send them to the state, we don't send them to shareholders. Those are for the benefit of management. We say we're reporting internally to management. Another thing, the layout, the format of these statements. Financial accounts, the layout, again, is required by law. Every country has its own rules about precisely what must be shown in these statements. There are accounting standards as well. Sorry, the writing goes bad when it gets to the bottom. Accounting standards. But, there's a set layout with financial accounts, what they must look like. However, with management accounts, again, there are no laws or anything. We have whatever layout is useful. Any layout that is useful for management. And you will see, as you go through the chapters, there are some chapters on the management accountant's profit statement. And you will see it looks a little bit different than the financial account statement. Because, again, as you'll see, we're preparing it for different reasons. What else? Well, I could go on quite a long time, but as far as the exam's concerned, we're just about there. The only other thing I will mention, which again, hopefully is already clear, financial accounts are always reporting the past. They're looking at the past. It's the job of the financial accountant at the end of the year to report how much profit the business made during the previous 12 months. For financial accounts, that's all we're interested in, what happened in the past. The management accountant, though, their job is to look to the future. Always, they're looking to the future because they're always concerned about how we can improve the business. In one sense, they don't care if last year we made a huge profit or a huge loss. Last year's finished, it's too late. What they're concerned with is how can we improve? How can we turn a loss into a profit next year? How can we increase the profit next year? Management accountant's job is to worry about the future.